Us now, Mr. Menon of Torrent Pharma on those earnings. Lots to discuss with him as well. Mr. Menon, thanks so much for being with us. Now, despite some of those headwinds that you've seen in key segments, Torrent has delivered. We've been looking at 17% EBITDA growth coming in the 9 months of FY21. You've seen strong cost control, of course. So now, is this a structural shift that you foresee? Is this, something that is maintainable on the margin side, given the kind of margins that you've been looking at on the higher side now?
No, I think the activities on the ground have started picking up, and therefore we should see a gradual uptake in the cost. This year, because of the activities being at a very low level, the expenses were also moderated. However, it will all depend on how the market is picking up in terms of adding incremental units next year. And we believe, some amount of cost efficiency may still continue. But what extent of operating leverage will play out in the next year is something we'll have to wait and see. So probably Q1 of next year should be a directional quarter on this front, I would say.
Okay, fair enough. That's a good sense of how things are evolving. Focusing on margins now, pre-COVID, we're looking about 25%. Now it's about 30% plus. What are the estimates, as you've described, with the factors currently at play and the cost ticking up? Where do you see margins going forward?
So I think the way to look for Torrent is FY20, the operating EBITDA was roughly 27%. And what we have said in the past is the way we look at our business, because of the branded generic fees being almost 65% of our total revenue base, we should see at least 75 to 100 basis point increase every year. So directionally, if COVID was not there, FY21 should have been at 28, and probably FY22 should have been at 29. But 29 is the base which I'm talking about for FY22. But there are certain positives which may still play out, right? I mean, the number one is certain cost efficiencies which have come in this year may continue next year. That's point number one. We've been impacted on the BRL USD depreciation, which has been the worst this year, almost 25%, I would say. And possibly with the economy reviving, we may get the benefit of currency appreciation next year. And third is with the US business coming back, hopefully next year, I think that should also push the margins up. So that's the way I look at it.
Quite interesting. That's exactly, Sudhir, what I want to talk about as well. Because, as we understand, the growth in the India business is coming from pricing growth. Is there scope to take further price increases in your India portfolio?
So I think the pricing is undertaken based on the competition landscape where we are, right? I mean, so if you look at a chronic space, the pricing increases in our covered market for the competition as well has been roughly 6 to 6.5%. And this quarter, I think the price increase contribution to the overall growth is around 6.5. So, I mean, future, it all depends upon where the competition is, right? I mean, so as a strategy, we don't want to be the number one or the price leaders in the market because that's not going to be a talking point for us. But I think in near term, at least for the next 1 year, 6% price increase should be sustainable.
Tell me a little bit about your US business as well, because there has been, it's come in lower, and I understand that price erosion was witnessed in the base business as well. There's also been the discontinuation of the Sartans portfolio.
Yeah, so I mean, the story is simple, right? I mean, we got this OAI warning letter somewhere in 2019 for both our facilities, which is oral solid facilities. And most of our filings have been from these facilities, right? And on the top of it, because of COVID coming in, the physical reinspection is not happening. Although I think in terms of the remediation, we've submitted everything probably in April, I would say April or May of 2020. So for us to show growth in the US business, the new products will have to come in, right? And unless the reinspection or the US FDA is giving a green signal on both our facilities, the new product approvals will not come in. So hopefully, I think there's a sense that US FDA has started the physical inspection recently. And probably by H1, we should see the US FDA coming to our facility for inspection. And then probably H2, I think we should see the new products coming in and US contributing to the overall growth of the company.
So if all goes as per what you indicated, Mr. Menon, that US FDA will come for an inspection, you will get a green light from them, how much will that add to your US business top line, assuming that everything goes as per what you just shared?
Oh, absolutely. So I think in US we are quite small, right? And I think one of the important priority which we had was to build a reasonable generic portfolio in the US. And based on that objective, we have been filing double-digit ANDAs almost since last 4 years, I would say. So the expectation is that once this whole thing is lifted off, the double-digit launches happening in the US, I think the double-digit growth should come back in the US.
Okay, but large part of your business, about 40% plus, is still the domestic market, and within the domestic market also, there is a bit of a pain. I'm using pharma company to describe pain. Pharma companies are supposed to cure pain, but yeah, for shareholders there is a bit of a pain if you look at numbers.
No, I think essentially, I think the way to look at the Indian market is basically the market has to pick up, right? I mean, so there has been a lot of disruptions over the last 2-3 years because of that. The market has been, on an average, doing high single digit, right? And historically, as far as Torrent is concerned, we've delivered growth better than what the market has been giving, almost I think 150 to 200 basis points, and that's exactly what we are continuing to do. Actually, for example, if you look at Q3, the market has grown at around 6%, and we've grown at around 8%. For the market, the volume degrowth has been 1.9. For us, it's been 1.6. So I think slowly the market will stabilize, the growth will come back, and you will see the volume growth coming back.
What will be your focus area in the domestic market? Will it be chronic? Will it be acute? What would you be focusing on?
So we are basically a chronic focused company, right? I mean, so chronic and subchronic put together is roughly 75% of our portfolio, and rest 25% is what is acute in our portfolio. And we would continue focusing on chronic and subchronic going forward as well.
Could you walk us through the API availability now, given that one side there is the entire China API issue which has come up, on the other side API in India is something which the PLI schemes are really pushing. Are you planning to change the API business of yours, both in terms of the future output and also in terms of input?
No, not really. So I think historically we've not been an API company. So I think most of our API we are outsourcing from vendors. And given the COVID situation, we had taken up the API inventory to a higher level, just as a mitigating step in case there's an extended COVID spanning out. But that's normalizing, I would say. So supplies have normalized. There were certain increases which we saw on products which was more China-based dependency. But those were seen in Q1, I would say. But after Q1, I think the prices at more or less the same level. So we don't see any undue pressure coming in from the API side. And PLI, as you said, we've not participated in the API part because, as I said, we've not been an API company, and all the capacities which we have for API is basically working on low volume complex products focused on developed markets, I would say.
Okay. Walk us through what, to your mind, will happen to the entire jigsaw in the piece, which is that the US I mean, the China One policy, how do you think this will change the future of pharmaceutical outsourcing?
Yeah, I think so. Each and every country has realized, right? I mean, there's over dependency on China for the API procurement, and all the countries are working towards removing this dependency and trying to see what alternate source or basically developing manufacturing within the country, and that's exactly what I think in our case the PLI scheme is addressing. But given the fact China has been a global leader in the API supplies, probably almost 60% of the global supplies coming from China, I think there's time before really a major shift can happen. So maybe 5 years down the line, yes. But in the near term, I don't think it's going to change drastically.
Sure. Sudhir, also, just taking a leaf out of your management call as well, or earnings call rather, and you talked about as to how Brazil as well as Germany have likely bottomed out and will revert to double-digit growth. What gives you this kind of confidence?
So Q3, Brazil has already registered a double-digit growth. It's in terms of constant currency, it's already registered a growth of 16%. And Q2, I think the growth was roughly 5% in terms of constant currency. And that point in time, what we had said is we've started defocusing on the institutional business. And adjusted for the base impact of the institutional business, we said we are at 10%. So Q2 was 10%, I would say, adjusted for the institutional base, the base number. And Q3, since the neutralization on the institutional business has already happened, we've registered 16% constant currency growth. And what gives us confidence going forward is that two things. So one is the space in which we are in Brazil, which is 100% chronic, is still growing at 8.5%. The market is growing at 8.5%. And for us, additionally, what we are looking at is from next year, we should see incremental launches happening. I mean, new product launches, 3 to 4 of them, which should help us to get incremental growth in Brazil. So that's the reason we feel it's quite positive as far as Brazil for us is concerned. And I think the only thing which is impacted in terms of INR is, as I said, the BRL USD depreciation, which was almost 25%. But I think that's the worst we are seeing. And once I think the Brazil economy starts reviving, you should see the currency appreciating and additional incremental gains in terms of INR growth coming in.
Sure. As I look at your balance sheet, it's only strengthened year after year, and now you're sitting at strong cash flow levels as well, given the kind of debt reduction that's already underway. Given that you have a strong presence in markets like Germany, Brazil, which you just talked about, and you have a sizable presence there, would you be looking at acquisitions? How is it that you're going to deploy the cash in your books?
So I personally believe acquisition happens when it has to happen, right? I mean, and I think historically, both the bigger acquisitions which we made, Elder and Unicam, that came to us and fitted in our financial framework, and that's how we acquired those. But yes, I mean, we are open. I mean, I would say that way. We are open to acquisitions, but I think on a priority, as long as that opportunity doesn't come, the focus would be to continue deleveraging our balance sheet, which this year, YTD December, we've already repaid 850 crores. And the net debt EBITDA, which was around 2.37 in March 2020, today stands at 1.6. So that's the key focus. But if good opportunity is coming, yes, I mean, we would be looking at it.
Haven't identified anything yet, is it? Sudhir, any acquisition that you may have already identified?
No, nothing at the moment.
Okay, just wanted to get that on record. Great speaking with you. Thank you so much for taking the time out.